The pound has rallied towards a 6-week high against the US dollar in the last week. The British currency has been on the bounce back since the lows in August, gaining more than 3.5%. Receding concerns of a no-deal Brexit have helped to drive some optimism towards the outlook for the British economy. Joining me for some insight into how to invest in the UK right now is John Ashcroft, author of the Saturday Economist blog. John, good to see you.
Good morning, Victoria.
So we've obviously seen this bounce back in the pound, both against the US dollar and in fact the euro as well. I mean, we had that major sell-off between March and August. I mean, where do you think we're going next?
Well, we saw it threatening the 120 level and a really good recovery now towards 125, 126, assisted by the move from the ECB last week and also the Fed this week. And also buoyancy and optimism about a Brexit deal. So it's been a good bounce up. But now we see there's a lot of overhead resistance, going to be 125, 126. And we see it trading now in a very tight trading band between maybe 123, up from 120, but 123, 125 plus is going to be the ambition for sterling in the short term, in the medium term.
So kind of year-end target, roughly?
Well, year-end target, it needs a good breakout. So in the last run up to 140, it was 2017-18. It took 18 months to unwind. There were some beautiful trading opportunities with 6 nice 3-month cycles to look forward to. But for the moment, a lot of work to be done just to get over this hurdle and overcome the Brexit overhang in terms of sentiment.
So what is your sort of base case when it comes to Brexit? Do you think we're likely to avoid that no-deal crash-out scenario?
Well, that's a fascinating question. But I think it's so difficult to determine what the strategy is of the new Johnson administration. So of all the strategy books and playbooks you can imagine, nobody really envisaged that there'd be a prorogation of Parliament, a shutdown of Parliament with the hopes of getting some kind of deal on the backstop. So, you know, it's a tight situation where a deal has to be done by the end of October or else there'll be an extension. Johnson's saying he's not going to get an extension, but it's so difficult to call. The world hopes, I mean, the business world I work in, A, they wake up every morning hoping it's just a bad dream and there's no Brexit whatsoever, and B, there'll be some incredible resolution which has to be done unless there's going to be significant job losses in the manufacturing sector specifically.
So you obviously work with a lot of fund managers, and it was interesting to see that Bank of America Merrill Lynch fund manager surveyed this week that pointed to an increasing number of international investors who are attributing an underweight to the UK equity market. I mean, do you think there are opportunities within the FTSE right now? Because, I mean, if we look at it from the lows after the referendum, it's rallied by around 30%. So do you think it's been kind of resilient in some ways? Well,
it's sort of trapped at the moment, hung at 7.3, and we'd look forward to a move to 7.5 for the breakout, but that will only come once we've got a clear resolution of the Brexit situation. I mean, the two big issues overhanging the world at the moment are Trump and tariffs and Boris and Brexit. And whatever, when you see for traders, it's a great opportunity because Trump's tweets can create great volume in the short term. But until we get a resolution of the European situation and the trade war with China, then we won't see a big breakout in the FTSE. But there's some good opportunities within the sector.
So what kind of sectors should we be looking towards then?
Well, we'll look at those that have been really punished of late. So the property sector, especially retail base, has been so savaged. And so there must be some reversal opportunities, some contrarian opportunities, the likes of into Hammerson and British Land. And also, if the bond cycle is about to turn, and at some stage it must, but as the bond cycle turns, then the banks are going to come back into fashion. So the big three plus RBS and even Yorkshire Bank, we would see Yorkshire Bank in for a good rally. Again, they've been hammered, signs of reversal at the moment, good bottoming out patterns, and if the bond cycle turns, then they're going to swing to the upside.
So what's your sort of temperature on the UK economy right now? Obviously there is this Brexit overhang, but I mean, we had that inflation data this week a little bit softer. We had that very disappointing GDP print in the last quarter. I mean, where do you think we're heading in terms of growth?
Well, I have a declared optimism bias. So when I look at the GDP data for the first half, average GDP was 1.5, and the Q3 figure will come out about 1.2 for year on year. So at the moment, most people are penciling in about, apart from the OECD yesterday, but most people are still penciling in about 1.2, 1.3 for the year for the UK economy, which is okay. But it all could be so much better apart from these self-inflicted wounds, which the fundamentals should be good in the economy. Employment figures are good, earnings are in breakout, inflation's affected by what's happening with sterling and oil, But nevertheless, the fundamentals in the UK still look pretty good. And I think if only we get some resolution, then this cloud of uncertainty, which is inhibiting business sentiment and business investment, then that would clear the way to some strong moves forward.
So clearly this is a bit of a conundrum for the Bank of England, and essentially it's in wait-and-see mode, as we heard from the central bank just recently. Where do you think we're likely to go next when it comes to rates? Are we going to continue on hold for some time?
Well, I think there's going to be a suspension for the moment in the UK specifically. We don't see any move to the downside, but there's great upside potential next year. What we'd like to see, I think, is a great moratorium from central bankers around the world saying, look, enough of this zero interest rate policy, enough of negative rates.
Which isn't going to happen.
No, I'm an optimist, remember? So they declare, look, we've had enough of this, it's not going to work. We need to get rates back to some kind of level of normality, and that restores equal value along the so-called yield curve. So, you know, for the UK, we don't see any big moves either way for the bank at the moment, and the issue is, you know, how long is Mark Carney going to be trapped in Threadneedle Street?
So, I mean, who do you think is likely to become his successor then?
Well, that again is a difficult call because the list of runners and riders is getting severely jostled at the moment. So there's even a question of whether or not Mark Carney will be asked to stay on yet again. Or maybe he'll he's been in talks with Mark Zuckerberg at Facebook. Maybe he'll be the new face of Libra.
Oh, well, there we go. John, thank you so much.
No worries.
That was John Ashcroft, author of the Saturday Economist blog. I'm Victoria Scholar, and thanks for watching IGTV.